Hello and welcome into the KE Report. Chad and Corey here, getting an update from Nick Hodge, co-owner of Digest Publishing and editor of Foundational Profits and Hodge Family Office. And Nick, it's always great to get you on the show about once a month here with our cadence, just to get an update on how you're looking at the macro side of the markets, the commodity sector, and the resource stocks. And I guess the theme this time that we were just discussing before we hit record is basically the rollover in a lot of the commodities. They're taking a breather after a lot of breakouts. It seemed like a couple weeks ago to a month ago, almost every interview we did was talking about a breakout in something. Gold breaking out to new highs, silver finally breaking above 30, copper breaking out to new highs, copper stocks breaking out to new highs. It's been a wild ride, but now we've seen the commodities rest and roll over. Should people be concerned? And some investors are feeling the heat a little bit the last couple of weeks, but how are you viewing this in the overall commodity supercycle lens?
Well, you should play back the tapes even further to before May and April to February when some of us were telling you that that fervor was about to come. So, there's contrarians and there's victims, as Rick Rule says, and the commodity run was beginning earlier this year on the opening up of China and India, forecast to grow 8% in 2024, and I was sort of telling you that at the time, and so the past couple of weeks, as you said, you had copper testing $5, which I told you was going to happen last month when we spoke. And yeah, people start to feel smart again, and everyone you're talking to is bullish, and then you get a consolidation. That's sort of how markets market and how cycles cycle. There's some macro things going on, I'd say. You've got an election in India that's making headlines. Modi maybe having to form a coalition for the first time in his 9 or 10 year leadership post, saying that India might not be growing as fast, and so the market will digest that, and so that's sort of narrative and headlines. But fundamentally things are okay. India is still going to have good GDP growth. Europe's going to have good GDP growth, and then technically, I look at the levels, and those are okay too, whether you're looking at uranium spot prices or copper or even oil. So across the board of consolidation, starting to see stagflation back in the headlines, but slowing growth and relatively high sticky inflation is a good environment for commodities. And so I continue to be bullish and picking my spots, and I'm adding on the things that are pulling back that I view to be quality opportunities. So happy to talk about some of those, or individual commodities or countries if you'd like.
Nick, from this whole commodity super cycle narrative, we had somebody even yesterday come on the show and talk about how long some of these cycles run. He was pointing to kind of 2020 as the start of the super cycle. What date do you look at timing wise for this super cycle if we're in one?
Whoever he or she was is right. It was 2020. So, you had the last one sort of bottom in there in 2020. It had been, it peaked in 2010 to 2013 with sort of that rare earth and gold record run, silver record run to 50. And then you had a tough decade with ZIRP, zero interest rates, et cetera. But, 2020, COVID hit, stimulus checks went out, et cetera. And that kicked off a new super cycle. So we don't have to rehash the past 4 years, but then you had a consolidation basically in 2023. And then I was saying, or what I've been calling, you had to kick off a phase two earlier this year. That was the February, March sort of timeline. So yeah, all these things are still bullish. We're in a bullish period. We're in a long-term commodity super cycle. I expect to last another 10 years. And yeah, so we'll take it as it comes. But right now, what I'm seeing is a consolidation and opportunity to buy.
Well, Nick, would you unpack the point you just made about being the phase two of the commodity super cycle? We actually titled your last interview that, and I had a couple people ask, well, what was phase one and why is this phase two? Maybe break that down for us.
Yeah, well, phase one was the kickoff in 2020, which we sort of just said, we had a lot of pain in the resource market, gold down to 1600, silver in the teens, people not loving copper, et cetera. The stimulus checks went out, and that creates inflation, right? And that creates a good environment for commodities. You remember phase one was all the memes, man. The Wall Street silver, the lumber going to the moon, the people carrying gas in their plastic shopping bags. You guys remember all that? Come on, that was phase one. And then all that sort of cooled off, right? The stimulus cash dried up. The consumer was tough. Everyone was worried about recession. That was the pullback or the major consolidation. The phase two kickoff was the reopening of economies after that recession scare, right? China returning to growth. Again, India growing at 8%. And now Europe coming out of what was a classic technical, fundamental industrial recession. I mean, you had PMIs in Germany and Spain and Poland and the UK that were, below 50. When you look at the manufacturing and the service PMIs, those numbers were contractionary for most of 2013. And that's when you had, that pullback in copper to $4 or below, and trouble in the precious metals market, et cetera. Rare earths out of favor. Lithium went from $80,000 a ton of lithium carbonate to 15 or something. I mean, they pulled all the way back, and then now Europe is opening up. Those PMIs are expansionary. They're back above 50. And that's just leading to growth. You've got, fundamental drivers in multiple commodities for multiple reasons, electrification, all the things that everyone knows. And now you've got that backed by actual growth in commodities and inflation. And that's a healthy environment for commodities. And that is phase two of the commodity supercycle. There will, of course, be ebbs and flows inside that phase two. And that's what you're seeing now. But the phase two, as I call it, is bullish. And so I guess a little tooting of my own horn, we held a webinar on this, me and my partner Gerardo Del Real, in March, that outlined all this and why we were calling it that, et cetera. But hopefully that lens, makes it a bit clearer for some of your listeners.
Nick, let's talk copper then, because May was quite a month for copper, straight up to all-time highs, and then in a way straight back down to where it pretty much started the month. Copper still at a strong price right around 450, but that monthly candlestick, that's a wild candlestick right now, kind of leads to that whole, I guess, short squeeze potential that was in copper. Short squeezes can actually be good. Volatility can be good for some of these commodities, but what's your outlook on copper after that wild month of May?
Yeah. So, bullish on copper. I think that needs to test $5, and that's what it did. It obviously failed immediately. That I saw that candle as well. That was a wide red candle, and you don't like to see that, but it's still technically bullish. And financing companies, I guess, is what I would say. So, look, I was telling you I was buying a copper ETF in February. That ran. I tried to get into Freeport last month. It was a bit too high, but now it looks a bit more attractive to me, coming closer to the limit price that I had set. Yeah, copper bullish still all the way down to 450, like you say. So I think it's going to hold there. Writing a check into Hannan Metals, if you want to talk individual companies, that's a company we've been invested in and followed since 2017. I believe have financed 4 or 5 times and have exercised warrants. And after 2 years, they've got a drill permit in Peru on a project that JOGMEC has joint ventured with them. Spending up to $35 million US to earn up to 75%, and they'll finally be drilling that. So that's exciting, and we're writing a check. But it's gonna test $5 again, and eventually take that level in the long term, and that's sort of the ebbs and flows in that super cycle that I was outlining earlier. So yeah, I mean, can't be more clear than that. Probably going to set, hope that limit order fills for Freeport, as I recommended in sort of my monthly bigger stock letter, if you will, and writing checks in the smaller companies as I continue to see a lot of slide decks. And it seems like the market is receptive as well. I guess another company that I'm involved in is raising money this week. I saw Gladiator is raising $10 million in a flow through priced at a premium to market, and the entire lot of $10 million is spoken for. So I'm not participating in that, but I am a shareholder. So it seems like the market is willing and receptive to continue to be bullish on copper. And so that's sort of my position on it.
Well, Nick, one of the things I really enjoy about having you on the show is that you're not just in tiny explorers, you're not just in big producers, and you're not just in ETFs, you're in all of it. And you're kind of a bird of a feather there, where I like looking at the whole spectrum of the different stages of companies. So with copper, and you've made this point on other metals and other commodities before too, you do that prodding approach where you may start with an ETF, and then you'll go into some of the larger producers, and then you get a little more animated by the earlier stage juniors as you go too. And some of those you've held for a while and funded for a while. Maybe just speak to that, because there's people listening that probably are in one camp or another. Maybe they only do ETFs. Maybe they only invest in the large producers. Maybe they're only in the tiny companies. How do you separate out in any commodity? It could be copper, but anyone, where this prodding approach, where you have different levels of exposure to the sector?
Well, you said it beautifully. It's about portfolio construction. And so, in my IRAs, or converted Roths or whatever, I'll be buying ETFs and I'll start to explore. I mean, you said it, exactly as I do it. And then I'll go into the individual producers, which I just outlined I'm trying to do now with Freeport, et cetera. And those continue to be bullish, by the way. Last time we spoke, BHP had just tried to take out Anglo, and that offer has since been rejected. And so there continues to be major appetite out there as well for companies that have robust copper assets. And so yeah, then I go into the smaller ones, and I just outlined how I'm doing that with Hannan Metals. I'm a shareholder of Gladiator, and I keep those in different buckets. So I'm not everyone and everyone's not me, and not everyone does things the same way, but I keep a retirement portfolio with larger, safer, cheaper positions. And then, I keep speculative portfolios with brokers, with TSXV companies that I finance privately and write checks into repeatedly and hold for the long term, and then recommend them, over cycles as they go up and down. And so I guess over time, I started doing private placements, probably 10 years ago, as I became to be a high net worth and as I had success in the market and financial publishing. And I just invest across the spectrum. I mean, it's just how I view the market. And I come at it with a macro generalist lens. And so I'm not always, bullish on gold or silver or copper or anything for that matter. I sort of go where the market goes and manage my portfolio accordingly. Now people are different. Like, just take my partner Gerardo. We have a 401k set up for the company. We've got 14 employees. He doesn't participate in the 401k, right? Like, he's entirely all in on the junior mining sector, and he's done really well. So everyone's different, and there's different flavors of lollipops. So I'm a macro guy, and I participate in the entire spectrum, and it's worked out well for me. But everyone is different, and you sort of got to listen to different people and what they're saying, and hopefully it resonates, and that strategy works for you. So, Shad, I mean, it sounds like you sort of understand how I approach it, and hopefully that's clear to some of your listeners too.
Let's go down that Gerardo role then, because a lot of our listeners are in the juniors, and we cycle back to that whole super cycle narrative. At the start of the super cycle, the juniors took note and they really ran. But man, oh man, it's been kind of a 4-year bear market for these juniors, and a lot of our listeners are wondering, when is that money going to filter down to these juniors? When are they going to start to provide those multiple type returns that those investors are looking for? Any thoughts on that, Nick?
Yeah, I mean, you get trapped. I mean, it depends on your psychological makeup, and everybody's different. But you have bugs out there, silver bugs, gold bugs, et cetera, and they ride it up and they ride it down, and they're always bag holding, and they're always bullish. They won't sell, and so there's sort of that component of it. And then there's people who are able to write checks, like Gerardo, who have success because of their network and because they're diversified, right? I guess this is an important point. People get concentrated in the junior mining space, is what I've seen, right? And they go all in on a couple of names, and they miss out on the wider things. So we're writing checks into a lot of deals. I'm actually quite focused on private placements because we're having a webinar about it for subscribers this month. So we've done something like 190 deals in the past 10 years, and I actually have the chart here because I just put it together. So what's the track record there? We've done 192 deals. We've closed 106 of them as winners. And so, that's a pretty good win rate. There's still a lot of them are open, and you end up getting big winners like the Patriots of the world and the BRVO Minings of the world, which I haven't mentioned yet in this podcast, that's onto a new separate discovery in Brazil. And so, there has been some winners, but you have to do your diligence, and you have to spread your bets. So, I can rattle off tickers that have had success, either ones that are heading into production, gold miners, or, smaller companies that have made discoveries lately that are starting to be rewarded in the market. But, it's coming. And then, I would point back to the larger companies and say that they're just getting started as well. I was looking at a Newmont chart just today, and it's had a good 6 months or whatever, but you pull it back to 5 years, and these things still have a lot of ground to make up. And I know that's always the narrative, but that's why I don't stay in them the entire time, right? At least not all in. So the money's coming. It's starting, like I said, writing checks into these smaller things this very month. Starting to see companies rewarded for discoveries. And I think you're in for a good sort of 5 to 10 year period, as, going back to that super cycle, as, these things take time to play out, a decade and a half, for example. And so that's sort of the best I can put it. If you have any more specific questions, happy to answer, but general advice or outlook at looking at the psychological makeup of junior investors, that's sort of my take.
Yeah, some great points there, Nick. And I do want to touch upon BRVO because you brought that up. And here's an example of where you're in a company because they're developing a, polymetallic base metals project that has a lot of PGM and nickel in it. And then they see an EM anomaly, go in and drill it and find copper and gold, and boom, it takes off. That's the beauty of the exploration side of the business. That's the beauty of a wonderful drill hit. Maybe just speak to your experience there, having followed the whole process here with BRVO.
Yeah, that's how it works out. And so junior mining is so interesting. You'll talk to people who've been in it for, 30, 40 years. And they say, you make your money in cycles. All the money comes in 2 or 3 year period when all the turkeys fly, as one of my mentors like to say. And then there's wild cards, right? Like, look back just over the course of history at like diamond fields, for example, just, flying over, looking, for a Gaussian in a helicopter and finding that thing. So in the case of BRVO, it's a PGM deposit, multiple million ounces with a gold and small nickel sniff. On a resource, a project that was owned by Vale that they drilled down to about 150 meters that they ultimately had to divest of. They considered it a non-core asset. They were having some in-country problems in Brazil, some tailings, dam breachings, et cetera, that led to them having to shed some assets. And a gentleman named Luis Acevedo was able to pick it up. This is going back a couple of years now, 2021 or 2022-ish. He's a serially successful entrepreneur, attorney, and geologist in Brazil. Portuguese speaking, has had success in mining before, has sold a previous asset for several $100 million. And he was able to pick up this asset called Luanga. So I could talk for a while about it, but essentially they've been continuing to drill deeper than 150 meters that Vale drilled on this PGM nickel deposit. And things have been getting better at depth, higher grade, some more sniffs of nickel, massive and semi-massive sulfides, and even some copper. So what they decided to do is fly the entire thing last year. They did it with a heliborne TEM survey, electromagnetics, and they identified some targets. I think there were 17 targets, and sort of try to find feeder zones for that PGM deposit. And they started drilling some of them, and we just got the results. And what they ended up finding was what looks to be an IOCG deposit, an iron oxide copper gold deposit, which your listeners might know are responsible for some of the, the largest and most robust mines in the world, like Olympic Dam, for example, and the market gets really excited by them. So this is over 1 kilometer away from the deposit. It's 11.5 meters of 14% copper. That's pretty good, right? So the market responds. Shares, I think, went up 75% in a couple of weeks. Rick Rule was in early on the private financing when I came in while the company was still private. That was at 50 cents US, 64 cents Canadian. And in that first phase of the super cycle, to tie it all together to the macro and the longer term, BRVO ran to $5 just on the PGM deposit. And then we had that pullback that we outlined earlier, and it came all the way back down to $2. And now it's back over 4 just in the past few weeks on the back of this deposit, which looks very real. People in the industry are talking about it. Rick Rule was on BNN talking about it, and IOCG seems to excite the market. So you get those wild cards sometimes. Was already a happy shareholder because of the PGMs and Luis's success, but it looks to be even better now. And Luis owns over half the shares, and he's buying in the market at prices over $4. I was seeing filings yesterday. So yeah, well, congrats to BRVO, and one of those overnight successes that's taken a couple of years, and then you find a wild card, and it's good.
It is good. All of these stories, any stories that move forward, especially new discoveries, can help the whole sector too. So hopefully we continue to see more of those. What about in the gold, silver space? We've seen both, kind of gold consolidate some of those gains. Silver has been volatile as can be, right around that 30 level. Are you seeing any opportunities in any of the companies in those areas?
Silver volatile, you don't say. They're both really bullish. So where, we were talking about oil and copper earlier, having, pullbacks, silver, while it's volatile, and gold having pulled back a little bit, are still bullish, I would say more so even than Copper, when I look at the chart, I think you've got the rates pulling back now, the 10-year and the 2-year both down a little bit on, growth concerns. I see stories about, potential overstating of jobs growth numbers. I see, reductions in the first quarter GDP from 1.6 down to 1.3% US GDP growth. And so this kicks off a narrative of, oh, maybe we are going to get some cuts. I mean, that leads Bitcoin to go back over $70,000, which you're seeing now. And that's also good for gold and silver. So they're really bullish, and some of these developers are performing really well. And it's a buy the dip in silver and gold. And speaking of the prodding attack and tying it all back together, went into silver in the past 2 months via an ETF. So I'm bullish on both those precious metals and continue to own them as physical commodities and equities as well.
Well, Nick, one more commodity I definitely want to get to that's also quite volatile is uranium. I keep hearing things like uranium just got started in 2023, which is just not true. If you go back to the pandemic crash, almost every uranium stock was beaten down in the dirt. And I remember buying uranium stocks back in 2020 and thinking, like, I don't know if this is a good idea, but I think that there's not going away. If you look at like a chart like URA, it went from $6 up to recently $33.66, so a 5.6x move. If you look at URNM, the Sprott Funds Uranium Mining ETF, it went from a low of $687 up to recently $60.17 for like an 8.7x move. So big moves. A lot of the move has already happened. Rick Rule has said the easy money's been made. But when you look at it, how are you seeing things now? Because the prices have kind of consolidated here. Are they getting ready to roll over and head lower? Was that it? Or is there another run left in these uranium stocks?
Oh, there's another run for sure. Yeah. I mean, they've been consolidating. I mean, let's call it essentially since last fall, right? I mean, you're talking about URA. So you're right. It ran to $33. It broke through 30 last fall and ultimately topped out in, call it January, February. And they've been relatively sideways since then. And that breeds frustration, right? That's the frustration that you're seeing. That's the easy money that's been made. But looking at URA specifically, that's perfect because that's a good barometer for the industry. And it's been consolidating at that $30 level. And I think what happened is, at least for me, is I thought that the consolidation period was over in late May. Mid to late May, you had it break back out above 31, in fact, touch 33 again. And I think in my mind, I was thinking, all right, that's the end of the consolidation. We're ready for the next leg higher. But in fact, what's happened is that it's pulled back along with the other commodities that we've talked about, earlier in this interview. And you got that URA back down at $30 at the consolidation level. So, I'm of the mind that it is still bullish for all the reasons that I think oil and copper are still bullish, and continue to buy uranium stocks, whether that's ETFs or even juniors, prospect generators, et cetera. So, when I saw it pull back here over the past couple of days, started to deploy just a tiny bit more capital in that sector. But overall, long-term bullish. And again, in a super cycle and lots of wind at its back, both on the supply and demand side. So frustrating for sure, but bullish still, I'd say.
All right. Well, we've covered a lot of ground in this one, from the commodity super cycle, the different phases of the commodity super cycle, copper and gold and silver and uranium, PGMs. We've covered it all. So I really appreciate the time you spend with us here at the KE Report, Nick. And if people want to follow along with Nick's work and his partner Gerardo's work, definitely click on the link below. This interview takes you over to Digest Publishing, and you can see the different offerings they have for investors. And as always, Nick, looking forward to our next conversation together.
Me too. I appreciate the time, guys. Thanks.